Good morning, everybody. What's happening? The sky is falling. Bitcoin and crypto prices are down. We're going to talk about that in this video. We're going to talk about what's happening, what we can expect going forward, and some possible reasons why this has actually taken place. But for those of you that are new to crypto, welcome. I'd like to tell you that this is something that we've seen over and over again, and it is not a new thing. For those of you that have been in the space for some time, I'm going to just play you a little snippet that will remind you that this isn't the first time this has happened. Let's listen to that right now.
Bitcoin, please go to moon. Stop going sideways now. Don't ever say we going down to 1K, but Mr. Novogratz say we have bottomed out. Bottomed out, Novogratz is bullish. Bottomed out, don't ever rise is bearish.
Bearish target 13 times there.
Novogratz is bullish.
Bitcoin could be at 40,000.
Let us go to moon.
I hope we all enjoyed that. But let's talk about why the prices of crypto are plummeting. This is certainly not something that's new. We've seen it happen in the previous bull runs. But just a quick look at the charts will bear testament to the fact that these drops and these wild volatility periods in crypto are normal. In fact, a lot of people are saying that it's to a certain extent very good because it shows that Bitcoin is energizing and we can expect to see bigger movements, higher highs in the near future. But having said that, and we know that nothing can go up forever, is it just a simple, healthy correction? Or is there something more sinister underlying this problem? So let's just look at what has actually happened. We had Bitcoin trading at about 19,400, give or take, and we yesterday went down to, I think, as low as 16,400 on Altcoin Trader. If we have a quick look there, Bitcoin was over the 300,000s. And yesterday we dropped as low as 254,000, back up to 272. So what has brought this on and what can we expect to see going forward? Well, I'm going to give you a very brief outline of what is happening, because what to me is very interesting is how this is very much paralleled to the situation in South Africa. So Brian Armstrong started a Twitter storm yesterday or the day before yesterday, which is argued to be the storm that started this mini crash or this correction in the Bitcoin and crypto price. Brian Armstrong is, of course, the CEO of Coinbase. I'm not going to read his entire tweet, but I just want to paint the picture and I want to give you the meat of the story so that you know what is currently happening in the crypto space. So Brian Armstrong tweets, last week we heard rumors that the US Treasury and Secretary Mnuchin are planning to rush out some new regulation regarding self-hosted crypto wallets before the end of his term. I'm concerned that this would have unintended side effects and wanted to share my concerns. Okay, so let's just go over a couple of terms there so we know what we're talking about. Self-hosted crypto wallets. What they are referring to in this case is wallets that you control your own private keys. In other words, non-custodial wallets where you are the sole owner and there's no one to go back to with regarding to those funds. So you are totally responsible to those funds. These would include MetaMask wallets, Ledger wallets, hardware wallets, Trezor wallets, all those type of things. Or if you just had a paper wallet and you were technically inclined and were able to control your private keys, these are considered self-hosted crypto wallets. Now what he's saying is, and you can read through this tweet to get a clearer idea, but the meat of the story is that regulators are suggesting, and it's important to know that at this stage, this is simply a rumor. It is not factual. Sell the rumor, buy the news kind of stuff. Anyway, what it is that any central exchange, when someone does a withdrawal of cryptocurrencies, they have to identify the recipient of that cryptocurrency. So in other words, if you're withdrawing crypto and you're wanting to send it to a friend, you would have to identify your friend. If you were not going to send it to a friend and you were going to withdraw it to your own wallet, you would have to state that that's where that crypto is going. Now, of course, this would create a closed ecosystem for cryptocurrencies. In other words, every single transaction would be tracked, and you wouldn't be able to have a lot of the freedoms that we have with cryptos. For example, you wouldn't be able to buy something from a shop without identifying them or making sure that they have already previously been identified. And this would constrict crypto and would constrict the flow of funds, because every time you wanted to make a withdrawal, if you are one of these people that uses multiple addresses, you would have to go and submit KYC or say this is my address, or in some way, shape or form identify every address. Now the problem of course comes in what happens if you're sending it to a smart contract. What happens if you're wanting to play in the DeFi space? What if you are sending it to buy services and goods? All of these factors have to be taken into account, and these are the unintended circumstances that Brian Armstrong is talking about. So we just know that for many, many reasons, this is not a practical solution. It certainly will give the governments more control, but it is against everything that we know about crypto, and it will stifle the innovation in the crypto space. We can't cut out all the DeFi options that we have. So the very next question is, will this hurt cryptocurrencies? My opinion is it won't hurt cryptocurrencies. It will simply hurt America. It will hurt the countries that institute this regulation. But there's a fine line here. It will be like closing the door on the alternative financial and forcing the flow of funds out of the country. And I don't think that the United States of America would do that. They're just simply too smart. So that is why I am not concerned about this current rumor. If they were to do it, there are plenty of crypto-friendly countries out there, and their own citizens would be trading outside the US-American borders. They would be closing the door on a section of the economy and getting trapped in time and lose out, and it wouldn't be long before they would realize the extent that this would have on the revenue, especially if crypto is going to become what we all expect it to become. And they would have to reverse that decision, and that would not look good. Now let's talk about the similarities in South Africa, because we know that at some stage the Reserve Bank and the regulators suggested that moving crypto off of an exchange to an address would be considered moving funds out of the country. Very similar, not quite the same. And if you did move funds to an unidentified address, which could be your ledger or your MetaMask wallet, your own wallet, which is in your house, they would consider that capital moving out of the country, and it would count towards your single discretionary allowance of R1 million per year. Now, of course, that is not practical, because it is also going to restrict cryptocurrency. It is going to restrict trading, and people would not feel comfortable putting their money into South African crypto, if we could call it that. Now, that would also not hurt crypto, but it certainly would hurt the country, because it would stop and close the door to the crypto economic system. Not close the door, but it would certainly put a great inhibitor on that. So we do know, especially Africa, has a history of not always making the best decisions for the inflow of funds into the country. But I do believe that cool heads will prevail, and those type of regulations that will put us backwards and will hurt the country and will hurt the economy and the people in the country, I think that they will be curtailed and they will be considered very carefully, because these decisions are extremely important, not only for individuals, but for current countries. This brings us to the question of what I speak about quite a lot on this channel, is the dramatic transfer of wealth. And what is now happening is we are seeing that countries are going to be held accountable for their decisions. And this transfer of wealth that we are seeing with cryptocurrencies is not only for the individual, but is now playing out in a broader spectrum and is for countries. We are going to see countries that make bad crypto decisions lose a lot of wealth, and those countries that are more crypto friendly, huge inflow of wealth into those countries. So, in closing, and the final thought that I would like to leave with you Have we reached the stage where it is irresponsible for countries and governments to not own cryptocurrency? That's it from me. Peace.
Stop going sideways now. Don't ever say we going down to 1K, but Mr. Novogratz say we have bottomed out. Bottomed out, Novogratz is bullish. Bottomed out, don't ever rise is bearish.
Barrett calls it a 13 time frame.
Novogratz is bullish.
Bitcoin could be at 40,000.
Let us go to moon. Bitcoin, please go to moon. Stop going sideways now. Don't ever say we going down to 1K, but Mr. Novogratz say we have bottomed out. Bottomed out, Novogratz is bullish. Bottomed out, don't ever rise is bearish.
Barrett calls it a 13 time frame.
Novogratz is bullish.
Bitcoin could be at 40,000.
Let us go to moon.